Hello guys, welcome back to our channel. This is Soji and you are welcome to Soji Forex. To all our new subscribers, I want to welcome you to our channel. Thank you for subscribing to the channel, and we are hoping that you will get and you are getting the best from the video content on the channel. So we encourage you that as you subscribe, you take our time to go through the videos on the channel so that you can maximize everything we have put together in order to help you to grow in your quest for being a profitable trader. So in this video we want to look at trading tricks that we can capitalize on, take advantage of it, and be profitable in our trading. What are some possible tricks that we can leverage on in order to make money from the financial market? Remember, whatever you trade that is able to give you money is more than enough. Okay, because the goal or the sole aim of trading is to make money, to make profit. So anything you are trading and giving you profit, then it's a good thing to stick on to, develop it, master it, and remain on it. Okay, so today, beginning first, we are beginning with one of our tricks, which is our Bollinger Band. And we said what this Bollinger Band do for us is that the upper Bollinger Band help us to know the exhaustion of the market. The middle Bollinger Band line help us to determine trend continuation. And then the lower Bollinger Band is what helps us to determine exhaustion point for a sell, and from there we can predict our possible reversal of the market. And then we have our moving averages, which help us to determine our entries. Moving average EMA 10, simple moving average 15, and EMA 22 respectively. Okay, and so taking us further, having established what and how these indicators form part of our tricks, then we have our indicator window 1, which has to do with our MACD histogram. Okay, the MACD histogram help us to when you get to the level of 90 or 10, and also the signal line crossing is a great advantage for us that we capitalize on as far as the trading is concerned. Also, it helps us to get our divergence. Okay, so one of the trick we leverage on is the trick of divergence. And what is divergence? Divergence is when the indicator window is doing the opposite of what the main chart is doing. When the indicator window is doing the opposite of main chart is doing, then we have a divergence. Okay, so for example, if the market is making a higher high and then the indicator is making a lower low, that is a bullish, bearish divergence. And if the indicator is making a higher high, all put together is a divergence. So those are some of the tricks. I'm trying to get a typical example of what divergence really mean. Good. Now, if you look at this chart, here you realize that the market is making a higher high. Okay. Now this is it. This is first high. This is another high. Okay. And then you can see that this is a higher high because this high is higher than this one. So it's a higher high. If you draw your trend line, you see how it looks. It's making a higher high. But looking at our indicator window here, you see that the indicator window is making a lower low. Okay, you can see it. You can see that it's making a lower low to the downside. So it's doing opposite of what the main chart is doing. And as such, considering our trading conditions, we said we want to see price piercing the upper band. Of course, we have the condition number one already met. Price is piercing the upper band. Then condition number two, we want to see our indicator around the zone, indicator around the zone of 90, which is also correct. We want to see our indicator window 2 to be around this zone of 90. Indicator window 1, I beg your pardon, which is the MACD, and it is. And then another double confirmation, which is part of our tricks, is the fact that we are now having a divergence. So with this divergence that we're having, we allow price to come down. Price closes below the moving average. Then we'll make our entry from this point. Our stop loss is up here, and our take profit is somewhere here. So you can see that this is our trick. This is how we take advantage of the market. In some instance, we draw our trend line, okay, across, and we wait for price to break it, and then we take our move towards the downside. Then another trick is that we look out for chart pattern. We look out for a chart pattern. Okay, here is a bearish chart. This is a bearish flag pattern, and if you look at this critically, you agree with me that it's looking more like a flag. It's looking like a flag. Okay, if you put your channel like this, good, and then you see this market coming down like this, if you connect it, it's looking like a flag. So this is a bearish flag pattern. So in this scenario, we wait for price to break it, okay, and then we'll take our entry as price break out of this channel. Our stop loss is up here, our take profit, and then it went in a big way to our favor. So these things are things that you need to acquaint yourself with them. Okay, get to know the various chart pattern and how it is being formed. Get to know divergence. We have a more detailed video of divergence on this channel. You can go and watch it over and over again until you fully understand the concept of divergence. Okay, so please, this is how it works. Another trick is the trick of support and resistance. Support and resistance. Okay, you can see that from the shaded portion here, where you are seeing now, this shaded portion, okay, is a strong resistance zone. This place is a strong resistance zone because market has been here ranging for days, and here is a resistance again. Here is more like a support, and then you can see how price went all the way down. Let's go to 1 hour time frame. Okay, you can now establish how price went all the way down from this zone, break it, and then you can see that price return beautifully. Price return, test this zone, and then make it way to the downside. So this is support and resistance, and you can see that if we should move from here to our lower time frame 15 minutes, you see now that is the point is in alignment with our upper Bollinger Band. So it is not enough that the price is at a resistance, but it is also critical for us to know that we are not trading it in isolation. We are trading it alongside with the fact that on the M15 it is already piercing the upper band and it gives us an entry. So the reverse of this, if you do the opposite, it is for a crash market. Okay, so these are the various tricks. We say the tricks number one is our special Bollinger Band, our indicators. With trick number two, we talk about our divergence. Trick number three, we talk about our support and resistance. Okay, another tricks, still have more tricks, like we have the tricks of the order block, we have the tricks of imbalance, that is improper price action. Okay, and then like many, even in this we can see that this is another trick. This is an M chart pattern from here before the market move to the downside. So all these are several tricks, but for this video we have looked at the tricks of our indicator, we have looked at the tricks of the divergence. So the subsequent video will be looking in detail, like the tricks of the order block, the tricks of the imbalance, the tricks of Fibonacci principle, how we can take advantage of it, the tricks of our premium and discount zone, the tricks of liquidity sweep. All these are tricks that we are going to look at in the subsequent video. And I believe that you are getting value from this video. Please subscribe to our channel. Click on the notification bell so that you'll be the first to get notified whenever we publish our next video. So please share this video with your loved ones, and thank you for watching this video.